All right, hello, ohayo gozaimasu. Welcome to DAO Tokyo Day 1. This is my first time here and just wanted to say thank you to all the organizers for this beautiful venue and great speakers that we have today. So before we get started, the topic of this panel is about investment strategies and portfolio management. And so we have a really great lineup of speakers with you today. So before we dive into the topics, I'd love to have each one of you introduce yourselves, which company you work with, and anything else you'd like to add. So maybe Dominika, we can start.
Yeah, sure. Hi, everyone. And yeah, great to be here and awesome, to have a lot more community events in Tokyo as well. I have been building the company from here. I'm the co-founder of Toku. We are building token compensation and employment compliance solutions for crypto. We work with a lot of different types of orgs in the space. Some of our customers are, fully centralized crypto companies. Others are foundations, DAOs, and so the whole spectrum. We work also with a lot of projects that are pre-token launch and are sort of thinking about their journey to token launch or decentralization. Majority of my team is outside of Japan, but it has been quite a journey building the company from here as well.
Hey, I'm Colton, Coltron.eth. I work for Karpatkey. We do on-chain asset management, specifically non-custodial asset management. We work with DAOs such as Gnosis DAO, ENS, Balancer, Cow, and Aave.
Hi everyone, my name is Arisa. I also go by Atoy, and I am a co-founder of a protocol called Cega. We are a DeFi structured investments solution where you can connect your wallet and stake into a strategy that is powered by exotic options. Our strategies have an average return of around 25% APY with minimum market risk, and we have set out to solve this problem in the DeFi space today, where all of the products are either too risky or making really low returns that are below US Treasury rates. So super excited to be here today and to talk about what is a sustainable and responsible asset management, and hope that y'all enjoy what we talk about.
Awesome. So as you can see, we have a nice variety of speakers and their individual expertises. My name is Maika. I will be your moderator and shepherd, basically, for the conversation today. I'm the co-founder and CEO of a company called Webacy. We build tools and services for safety and risk management. So when it happens to come to DAOs, you can understand any address on chain. If you're sending money to someone who is potentially risky, safety and sanctions related, compliance related, everything from hacks and scams to social and civil. So it's very powerful in terms of risk mitigation. Now, before we dive into these topics, I'm sure that people here, you may be part of a DAO, you may be running a DAO, or you're building tools for DAOs. All of this is not financial advice, but I think that based on this topic, there will be a lot of financial things that are being spoken about. Each individual opinion are their own, so NFA. So the first question I wanted to start with is that if you were tasked with growing a DAO treasury, what would you do and where would you start? Probably something we're all very interested in. I would love to throw this to Colton to get us started.
Yeah, so kind of like the room here, I think like in my background, I work in governance, right? So this is kind of a growth role, and I think of this not so much as what strategies we would employ. I'm actually more focused, and I think what's more important here in the questions is like, what are the intentions of the DAO? Like, I think that's really important for service providers, and I think that's like really important for DAOs to have sussed out before they invite service providers in. I think that conversation can be collective, but there needs to be actual frameworks in place to support service providers. I look at ENS, which has hired Karpatkey, and what they did really well there was they had the framework in place, they had the intention, they put out an RFP process, and the mandate was really clear. So coming in as a service provider, the job was really easy, and I really think that's a good model. If there's any kind of like nugget of wisdom for a service provider or a DAO contributor here, I think it's like really important if you're a DAO contributor to create a place to invite service providers in so they can actually like execute, to your desire. And then if you're a service provider, I think it's really important to like read the room and understand what exactly they want so they can serve you. I think putting those two things together is going to, actually have a successful outcome for growing the treasury, independent of like whatever nerdy DeFi strategy you like employ.
I do have a follow-up question on that,
Let's do
actually.
it.
So you work with a lot of DAOs in terms of the treasury management in your day-to-day work. I want to know about with different DAOs, how do you manage the risk profile of each DAO and then help them, based on that risk profile, grow and have those strategies?
Yeah, so I think like it depends on the DAO itself, and I don't think there's like one risk profile that we would choose. I think it depends on the DAO. I think historically Karpatkey has generally favored like low yield, risk averse strategies that are more focused on capital preservations, a la like ENS endowment. But like I think we are seeing more of an appetite for more yield, especially in the market today. And we are getting demand for that. So I think to answer your question, it's again, in rooting it back to my initial point, like it's definitely something you need to discuss with the DAO contributors, with the operators, so you can actually nail that down. And then when you are executing those strategies, like it's very clear why you're doing so.
So there are a lot of DeFi options out there for treasuries to grow and manage their portfolio. Arisa, I wanted to know, in your eyes, what kind of options do you see out there in terms of DeFi products for these treasuries? And then even what would you recommend?
Yeah, that's a really good question. And I think in my intro, I mentioned that right now in DeFi, there's a really big ecosystem problem. And that problem is there's only two types of yields on very varying sides of the risk profile. You're either investing in perps and meme coins that are extremely risky and probably EV negative, or you're opting to invest in below US Treasury rates on Lido or becoming a validator. So I think what's really important is figuring out what are the kind of options that are available between those two types of yields, and how do you diversify your yield enough so that you're also diversifying other types of risks, such as credit risks, smart contract risks, and just overall like environmental, like macro risk. And I think to kind of answer Maika's question directly, like where would I start? I would first think about the portfolio optimization or the composition that is optimal for your DAO. And I'm going to reference a traditional finance book, but there's a book called A Random Walk Down Wall Street, which talks about the expected value of your portfolio over a long period of time. And what it says is that, when you're younger, you should be able to invest in more diversified yields and to also take a little bit of market risk. And then as you grow more mature and older, you should focus on some more conservative strategies. I think this applies to DAOs as well, where when you're just starting off, I think it's okay to allocate a part of your treasury into blue chips like Ethereum, and then to also ride out the market, because the existence of your DAO is quite correlated with the growth of the market itself. But as you grow and become a much larger DAO, I think oftentimes partners like Karpatkey would help manage your treasuries, and they have very sophisticated understanding of what is an optimal allocation between different yield options like Cega, as well as perhaps some of the more like stablecoin yield type of strategies, or some type of like lending and borrowing strategies. So I think at the end of the day, when you're more mature, you should work with someone that has a lot of industry knowledge, and then diversify your yield across the different DeFi categories, and perhaps work with kind of the category leaders in each of those sections. So I think with lending and borrowing, Aave is a great tool. I think with stablecoin yields, I think Curve is a great tool as well. I also think with options, Cega is a great tool, and really it's a combination of staking into those different services that will create a risk-managed, stable return for your DAO treasury.
The piece about maturity and risk tolerance is really interesting, and I think over the past few years we've seen changes within the popularity of DAOs. A few years ago there was a DAO for everything from like pizza DAO to sauna DAO to sushi DAO to ramen DAO. And then now we're starting to see DAOs, there's a fewer number of very large, more mature DAOs today, and the problems change within that life cycle. But with any DAO, compensation, whether it's writing grants to someone or paying the actual contributors to a DAO, this is a really big topic within it. So I wanted to ask Dominika, who from Toku, what kind of interesting compensation structures have you seen, or just regular compensation structures, and are there any that stand out to you?
Yeah, so maybe before I dive into that, and I think it's actually very related to what Arisa and Colton were saying about sort of where do you start from the investment perspective. Like a question even before you can answer that one is that, okay, what is my budget? And interestingly enough, obviously compensation it sometimes takes a majority of that operational budget for any project, and sort of figuring that out, like, okay, what's my starting point? What is actually the money that we have, and what are we trying to achieve, to Colton's point? Not only with the money that we want to invest, but also with that we want to actually spend to accelerate the growth. That's the starting point. I think that from compensation perspective, since it's such a significant part of the operational budget, it also has to be like very tied to to those long-term objectives of the DAO. And I think that there is this sort of like bias to action where you feel like, okay, well, we have a token, we have this liquidity, we want to do all of those things, we sort of want to get best people, and then you end up with like a lot of different contributors that are lost because, we obviously still have an onboarding problem. And then also it creates a problem of like, how do you actually measure that sort of return on that investment on bringing people on board. From purely just like addressing the compensation question, we still see a sort of wide range of different models. So we still see people working on a project basis where there is a governance proposal and you bring someone for a quarter, 6 months, a year to do something very specific. Ideally, you go through this RFP process, which is a sign of maturity of the DAO if they can figure out like what are the key decision-making criteria for bringing someone on board, and you create those KPIs, which feel like very like corporate word that we all have an allergy to, but it is there for a reason, to be able to hold people accountable for whether they achieve the objectives or not. So hopefully, those are there, and that sort of one of those models then would be this sort of project base. There are grants, there is retroactive funding, and so on. There's also a lot of different models when it comes to more ad hoc type of work, where you maybe have like a bounty program and you want something small to be achieved, and people come in, do this small thing, and then maybe do it for a couple of different DAOs at the same time. More and more so, as a result of this maturation in the space and a sort of emergence of bigger DAOs, we see a lot more people working full-time. And the next question then becomes like, okay, if I work for this DAO full-time, and how can I think about it from my lifestyle perspective? Problems that Toku specifically solves is also, how do I pay taxes if I work for a DAO? How do I get a visa if sort of my employment feels a little unstructured from regulatory perspective? So we are one of those service providers that can help, but we still a lot of variety, which is great. But each of those have a lot of different considerations, and I think that the most important thing is just being very clear. As a DAO and as a contributor, like, what is your plan? What do you want to do? And then how sustainable it is in the long term. And then I have been talking for way too long, but just the final thought, and I think that Colton and Arisa also have some thoughts on this, but is this idea of professionalization of services, where you, instead of bringing on board an individual, you bring a service provider who has a deep expertise in a very specific topic. So I think that's also something that we are seeing more often.
Yeah, I think setting up a DAO is really hard from a regulatory and operational perspective right now. So having like a setup as a service type of service would be pretty helpful for a lot of people starting in the space. And back in 2019, 2020, you can spend an entire year setting up a DAO, but now the speed is different. When you're a builder, you want to focus on the product building and all the legal setups, all the payment setups, it is a time suck. And to be able to rely on services like Toku, I can definitely see a lot of the viability around it. But I guess I'm also curious, like in terms of how security is viewed in DAOs, like Maika, do you have any thoughts on how we could better leverage these services to also maintain better security around DAOs?
This is a really tough question because I think a lot of these DAOs are now leveraging really excellent platforms for things like DAO governance and voting, which abstracts a lot of the security issues. So in my mind, when it comes to security around DAOs, there's two things. There's access to the treasury and then actual voting on governance proposals. And those are two different verticals of security. You have to think of them differently. A lot of DAO treasuries use a Gnosis safe, a multi-sig, and the security is pretty good, but there are cases where somebody their private key got exploited, and if it's multi-sig, typically that's okay, but there are cases, for example, with L2s that I will not name, where maybe one person has access to all of the multi-sigs, right? So these are situations of risk that you have to manage, and there are tools out there like Webacy that helps you monitor these types of transactions. Now, when it comes to governance proposals, there's another risk here, because nowadays, we were just talking about this backstage, it's harder to tell what is spam and Sybil when it comes to who's voting, because how do you really know if it's well managed? There's some really, really mature Sybil systems and Sybil people out there. If you go on Twitter and look at it, some people have written up really, really detailed methodologies for Sybil to not get caught and also be counted as valid members of a team. So I'd actually love to throw it kind of maybe to Colton to start. What kind of things have you seen within the governance voting space? Have you seen anything malicious? How is that managed? Yeah, I just want to throw that general question to you.
Yeah, I mean, so Karpatkey interfaces with many DAOs, or we're embedded in a lot of DAOs. Its main channel of communication. There are customers. We're on their forums. I think there was recently a discussion in one of the protocols we're involved in about essentially AI delegates, and it's kind of a hot topic, but there was actually someone spinning up AI forum posts and AI accounts, and they were fairly convincing. I think for me, that's interesting and a little bit scary, because even myself, I feel like I'm fairly savvy, but there was actually a moment where I'm like, is this really real? Because we all are fairly distributed, we're anonymous. I may not have met this person on the call, and unless I do, I don't know if I believe they're real, and I guess it's probably getting better where I could even be tricked in that situation. But yeah, that's probably the most recent thing that I've seen currently. But I would expect there to be more challenges in the future. I think that's continually evolving, and as long as these treasuries are large, and as long as there is something to take advantage of, I think it's always going to be a risk that we're going to have to think about and mitigate.
Yeah, I just learned this actually backstage, which is more of an insight to my lack of knowledge within the DAO space, is that a lot of the DAO treasury management choices and decisions are by governance vote, which is pretty wild to me. And so we're coming up on the second half of this panel, and I do want to throw out a question about, Arisa, you brought up the fact that when it comes to options for yield and options for investment strategies, there's one on the really low and safe end, which is lower than some US Treasury yields, and then there's risky, really risky on the other end. So my question to the entire panel is, do you think that DAOs should actually take a more risky approach or a more safe approach considering the current crypto environment?
Maybe as someone that works closest to the crypto markets, I could start. I think I would always focus on starting from the more safe alternatives first. And the way I see it in crypto, and to make references to the traditional market, I think a validating service or something like Lido or maybe tokenized US treasuries are essentially what I would consider like a bond in a portfolio. And there's a pretty famous 60-40 split in traditional markets where something very optimal would be 60% in safe assets and a 40% in risky assets. And so I would say 60% of your DAO portfolio or 70% depending on your risk appetite could definitely be in these US Treasury tokenized assets or something like Lido. And then maybe 30% can be in a step beyond Lido, but maybe a little bit before meme coins and perps. So I think Treasury should always be a little more conservative, but I think it doesn't have to be 3% yields. It could be something like 15, 20% yields. And there are definitely some products out there. So obviously Cega products have around like 20 to 25% yield that you can diversify 40% of your treasuries into. You can also do like L2 token staking, which also has similar yields like that. So I think there's definitely options that you can explore for this extra 40%. But you definitely would want to be on the more conservative side, and you want to start by allocating more than half of your assets into something very safe.
You mentioned something earlier, kind of like thinking about, the state of maturity and where you're gonna like park your assets. I think you kind of alluded to like a life cycle fund or something. So like the risk profile is going to change over time. I think that's an interesting model to explore. And to be honest, I haven't seen too many DAOs think of it that way, like that complete analogy. I know, we work with ENS, and ENS, has thought of like the weight and where they are. And I think where the discussion that was happening internally was like, there are a lot of people that rely on this protocol. Like we need these funds to be safe. So they did lean and skew more towards the less risky strategies. I think my big takeaway from this and kind of like something I think we sometimes lose sight of is like risk is correlated, or yield is correlated with risk, unless it's like an entirely boosted pool. So I think like we do need to like have priorities. And I think this is like also why like investment policy statements, like these like fundamental, frameworks need to be in place. So the expectations are clear and you can make those decisions much easier.
Yeah, I think that there's like really interesting thoughts around DAO Treasury management, though, because I think a lot of DAO Treasuries have this policy of only doing delta neutral strategies. For those of you that haven't heard of the term delta neutral, it means you don't take any market risk, like zero directional risk for if the markets are going up or down. But I actually think, even in traditional markets, funds don't have a completely delta neutral approach. I think if you're making a 20% return with a less than 1% market risk, it's an incredibly good trade. And I think the 1% market risk, people put too much fear and uncertainty and doubt around this 1%, when if you actually look at the expected value, so what is like statistically the likely outcome of putting funds in a 20% yield, 1% risk vault, it actually is a lot more profitable than if you were to put something in like a 3%, 0% market risk vault. And so I think in crypto, there's this dichotomy between the 0% risk and 1% risk that no other markets are looking at. And if you think about some of the safest funds around the world that is traditional, like the Japanese pension investment fund, the GPIF, they take directional risk. They're mostly delta neutral and mostly in bonds, but they still take some directional risk because that is where you can really differentiate your yield and your returns versus other funds around the world. So I actually think there's a lot of value into looking into some lesser delta neutral strategies.
It sounds like there's a lot of options out there. And my brain does happen to go to taxes. How do you even manage, especially when you have your treasury involved in all of these different positions? Dominika, you might be the right person to ask for this, but what options do DAOs have out there to manage taxes on this?
Yeah, that's the topic that no one likes to talk about. Both in your personal life, when you get that email from your tax advisor that it's time, is like the scariest email of the year. But overall, I think that it comes down to the structure of the DAO. I think that there is another panel during this event about legal structures for DAOs, and there is a lot of different models. There are DAOs that have gone down the path of sort of staying away from any jurisdiction and staying away from any sort of incorporated entity. Those are the ones that have highest exposure to liability, and of course when it comes to taxes, it also creates the highest risk. There's a lot of interest from regulators in going after those DAOs, both from contributor perspective, because they are easier to identify, and then obviously over time to sort of the broader DAO. On the other end of the spectrum, we see a lot of structures where there would be a DAO, there would be a foundation, there would be a development company, and they would be all separated but part of the same ecosystem and sort of working together for the advancement of that specific protocol, idea, and so on. And so each of those entities obviously has a very specific objectives, and they would be taxed and looked from regulatory perspective very differently. But this separation really helps because it shields the liability across those sort of different pools. And I think that this idea that you create a DAO and it sort of belongs nowhere and belongs to the internet it has been proven wrong already. And at the end of the day, if you're really building something for the long term and building sustainably, you need to think about how to stay compliant, and not only from the perspective of taxes, but also how are you exposing your contributors to those risks. So there's no one question about how those taxes would work. They would largely depend on the legal structure, and then if there are gains and the entity is incorporated, there are corporate taxes and capital gains taxes the same way that for a normal sort of company. But that helps, right? Like you want to leverage those well-established frameworks to make sure that you can tell everyone that you are building for the long term and playing by the rules. And something that we sometimes see is that people try to innovate on the wrong thing, and like taxes compliance is just not that. Like you can spend your creative sort of mental powers on things that are really important on the protocol, on the community, and not on the things there. And to earlier point, there's also an emergence of service providers that specialize in making sure that you can stay compliant. And if you have a preference for creating a legal wrapper for your DAO, and wow, this is so aggressive. Yes, my rant about taxes is over anyway.
No, thank you. I'm really grateful that companies like Toku and you are building in the space that can at least have that knowledge so that everyone else can spend their time building other stuff in the crypto space, but always super important, and I think we all know that. But now that we're all super experts within portfolio management and investment strategies, I hope all of the DAOs that you are running go to the moon. And before we close out this panel, I wanted to give a chance to all the speakers to tell about where to find them and the companies and anything else you want to say. So maybe Arisa, we can start with you.
Yeah, thanks everyone for listening in today. If you want to follow me or follow about Cega, my Twitter is @ArisaToyo. I also have a Japanese Twitter. It's @ArisaToyo_JP. I go by Atoi. And then in my protocol, Cega, we have discord.gg/Cega, and we're also available on Twitter @Cega_Fi. And we recently started a meme account called Cega Intern. So yeah, that's 5 accounts for you.
Yeah, so my personal socials, you can just go to Twitter, and it's Coltron _ETH, and it looks like that photo. For karpatkey, I think one of the things I want to highlight is that all of our reports are public. So you can go to reports.karpatkey.com, and you can see all the portfolios it manages, which pools were deposited in, and it's very transparent. And if you're interested in what we're doing and how we do it, that's exactly where to go.
You can find Toku at toku.com, or on our Twitter, use Toku. And if you want to reach out directly, team@toku.com.
Awesome. And Webacy is webacy.com, and my personal is @Maika Isogawa on Twitter and everywhere else. All right, I think we'll wrap it up here. Thank you all.
Thank you so much.